What's up YouTube, Nolan here. So today guys, we're going to talk about growth stocks. And guys, if you are a fan of the channel, then you know that I am a big fan of growth stocks. In fact, most of the stocks that I buy fall into this category. I do want to say I don't own any of the stocks that we're talking about today. These are just companies that are kind of on my radar. I'm kind of letting you know what I think about the companies right now. And if I do in the future choose to hit that buy button and own some of these stocks, I will definitely let you know. And the way you can tell when I buy those is through Stock of the Week, because every week I buy a specific stock and I'll let you know what stock that is on Tuesday at noon. Today though, we're just going to look at a few stocks that I really like, that are on my radar, some good things, haven't bought them yet. There's a whole lot of various valuation metrics that we can use as investors to see, when a company is going to go up or down. And the majority of these metrics, guys, look back over the last year. But of course, we as investors, as long-term investors especially, should be looking forward. And so sometimes these valuation metrics aren't as useful as, we may sometimes wish they were. Growth stocks though. Growth stocks are appealing to us as long-term investors because with a lot of time, our investments will go to the moon, or at least they do a lot. A lot of times that happens. So what other people thought was overvalued at one time became a bargain in hindsight. And that is the philosophy behind this channel, in that we don't necessarily care about what the price is. We do a little bit. We don't necessarily care though about the price of a stock, because if the company explodes, it's going to be a bargain in hindsight. So let's look at the first stock today. I don't want to hold you for too long. First stock that we're looking at today is Digital Turbine. A year ago, the market cap for this company was less than $1 billion. But CEO Bill Stone cast a vision for the company, and this is what he said. He said the company is going to become a unique next generation advertising technology ecosystem. What did he mean by that? Well, he's addressing a $300 billion market, and at less than $1 billion, it was wide open to him. So a year ago, Digital Turbine acquired Mobile Posse to help build the ecosystem. And during the last year, they also acquired Ad Colony, Appreciate, and Fiber, 3 other companies. So the market cap is now past $7 billion in a year. That's some big growth, guys. Let's look at some of the numbers. Fiscal 2020, the revenue was $139 million, which was up 34% from the last year. Fiscal 2021 ended in March. Revenue was $314 million, up 126%. 126%, guys, in 2021. And in fiscal 22, management thinks that the revenue is going to hit $1 billion. 8 times the revenue from 2 years before. So what do they do exactly? This company assists developers in getting applications on phones by partnering with service providers, and the big 2 that they use are AT&T and T-Mobile. Now here's a little bit of a risk with the company, and this is what I'm keeping my eyes on, guys. There's a limited number of service providers, and these service providers may choose in the future not to work with Digital Turbine. For example, fiscal 2021, 26% of their revenue came from T-Mobile. 26%, and 23% came from AT&T. That's almost 50% of their revenue coming from T-Mobile and AT&T combined. Another risk, guys, is that most of their business is on Google's Android phones, and Google has been changing its ad business, and Google may decide, or they may begin to build their own system to compete with Digital Turbine. And a final risk that I'm kind of keeping in my mind right now is that all these multiple acquisitions, those 4 acquisitions that I listed, those can be challenging to integrate and execute in the company. But if they do pull it off, If they are able to, execute, if they're able to keep these acquisitions, then I think we have a reasonable price for the stock right now at 7 times its sales and 35 times forward earning estimates. So I'm just waiting to see if they can execute on acquisitions before I buy. All right, guys, now before we go on to the next stock that we're talking about today, I do want to say we're doing a giveaway on the channel, $50 to one of you lucky subscribers. So all you gotta do to enter in on this giveaway is just like and comment on this video and just make sure you're subscribed. All right, and if you've done that on previous videos, you can do it again on this video and enter your name in for a second time. We're gonna do the giveaway, guys, when we hit 250 subs. And when I looked last at the sub count, we were at 150. So we've got a little ways to go, but we are on track to get there soon. All right, second company, guys, that I'm keeping my eyes on is Peloton. Now, this company hasn't grown through acquisitions, but they've grown nonetheless. In fact, this company has grown over 100%. They have over 100% annual growth since the company was founded. That's right. Since this company was founded, they have over 100% annual growth. Fiscal 2020 revenue was $1.8 billion, and it was up about 100% from the previous year. Fiscal 2021, the guidance is at a revenue of $4 billion, which will be up 122% from 2020. Now, the guidance keeps getting bumped up due to high demand for their products. And it also takes into account a $75 million loss due to a recall on their treadmills. So this company is exploding. Like, if you're looking at growth stocks, this is mega growth stock right here, Peloton. Their profit margin for their subscription business is also expanding. And to understand Peloton, guys, you gotta understand they have a two-sided business. They sell products for a one-time charge, but then they also sell connected features that are using monthly subscriptions. So they have a subscription model for their features that are attached and downloaded onto their products. In the first 3 quarters of fiscal 2021, the gross margin for subscriptions was 62% compared to 57% last year. And management says that the gross margin is going to be over 70% long term. So if they keep retaining their customers like they have been doing, if they keep holding on to these subscribers, these subscriptions are going to make more and more into the revenue mix. More and more of their overall revenue is going to come from subscriptions, which is going to boost their overall margin. And their subscription business also has fewer costs. For example, they don't have to advertise it, because if you're paying monthly for the Peloton products, then you know about them. You have them. So last quarter, they had over 2 million subscriptions. Over 2 million subscriptions last quarter. Management wants 100 million. Yeah, they have 2 million now. Management says we want 100 million subscribers. Is that a crazy goal? Maybe. But it's maybe even if they just got a fraction of that goal, if they just accomplished a little bit of that goal, it would send this company to the moon. So I'm going to keep watching this company, guys, and I'm going to let you know if I do buy in. Now, guys, if you want some free stocks right now, like completely free, download Robinhood or Webull. I put the links in my description. Download them. I wouldn't be saying this if I didn't get a stock or two out of it for free. But do it, guys. You'll get the stocks too. We all win. Just do it. All right. Okay, let's talk about that last company today, and that is Snap. I'm keeping my eyes on this company. This is the parent company of Snapchat, which is a popular social platform. And they've seen growth of 43%, 45%, and 46% over the last 3 years. So all of them over 40%, and you'll notice every time we're increasing a little bit. But that's nothing compared to Q1 2021, which was up 66% from the previous time last year. And their guidance for Q2, watch this. Guidance for quarter 2, guys, 81 to 85% growth this year. So it looks like 2021 is going to be the 3rd consecutive year of accelerating growth for the company. Now, if you looked at those numbers, then you may have noticed Snap has a whole lot slower growth than Digital Turbine or Peloton. But I still wanted to add them into this list because their strength is in sustainability. Management says that they can keep driving this kind of growth of over 50% for the next several years. And this makes sense to me. I'm not just taking their word for it, but this makes sense to me because they have a growing and engaged user base, mostly Gen Z. And Gen Z, got to realize this, that their purchasing power is ever increasing. So Snapchat is getting in on this. They're upping their advertising game. It's going to lead to more revenue. The company is turning the corner on profitability. A lot of their investments, they put cash out there. They've seen the returns, and now the revenue and the cash flow is coming in. And I'm thinking that cash flow, that revenue, is going to drive that cash flow for years to see, at least for the foreseeable future. The company is still investing right now heavily in AR technology. That's augmented reality technology. And they're finding, I think that's a promising place to channel that expanding cash flow, as this is an ever widening market. But guys, I'll keep checking in on these 3 stocks, and I'll let you know when I personally make that choice to buy in and to own some of those stocks for myself. So remember, guys, stock of the week every Tuesday at noon. Come back, I'll let you know what stock I'm buying and why. But anyway, guys, I really appreciate all of you. Thanks for watching. Y'all have an awesome week. Remember, dream big, and I'll see you next time.